In this video, we'll be going over the IRS Interactive Tax Assistant that helps taxpayers determine whether or not a distribution from their IRA or retirement plan is subject to the additional tax. So the additional tax being the 10% early withdrawal penalty. So obviously, taxpayers who make qualified distributions that are age 59 and a half usually are exempt from that additional tax. However, if you are younger than that, you may still meet one of the allowable exceptions under Internal Revenue Code section 72T. So you'll need, if you have received a Form 1099-R, then you'll need to know whether or not the distribution code in box 7, what that says. And then you'll also need to know what type of retirement plan the distribution was made from. And if you did roll an amount into a 457 plan or a deferred compensation plan, you'll need to know how much of the distribution is attributable to that plan. And then for governmental plans or qualified retirement plans, you'll need to know whether or not it's a designated Roth account. So one last thing, keep in mind that this tax tool is for taxpayers who are U.S. residents or citizens for the entire tax year. For international taxpayers such as non-residents or dual status aliens, you'll need to see the international taxpayer section of the IRS website. So let's go ahead and begin. At the time of this recording, we have not completed the 2023 tax year, so the most current version of this form is the 2022 tax year. So the first thing it asks you is what type of plan the distribution came from. So let's just say we took it out of a traditional IRA. Then it will ask you, was your home in a federally declared disaster area that started on or after December 28th, 2020? If you ever have any doubts, you can always click these highlighted blue areas, and it'll tell you exactly what this is. In this case, a federally declared disaster area occurred in an area declared by the president to be eligible for federal assistance. You can find more information in IRS publication 547. So let's just answer this question no and move on. So it'll say, did you receive Form 1099-R to report that reports this distribution? So let's just say that we did. Let's pretend that we're trying to figure this out for tax season. And in this case, you'll see a variety of options listed for the codes. So let's say we used code 1. What would that tell us? Did you receive the distribution as a beneficiary of a deceased account owner? Let's say yes. So in this case, this would not be subject to the additional tax on early distributions because you're receiving this as a beneficiary. You would use Part 1 of IRS Form 5329, which is the additional taxes on qualified plans, to indicate the exception that you meet. So let's go back and let's imagine that we did not receive this as a beneficiary. Were you aged 59 and a half or older? Now it's going to go through the different type of exception possibilities. So permanently and totally disabled, did this apply to you? And the IRS actually has a legal definition of what permanently and totally disabled means. So in this case, for tax purposes, it means that a taxpayer cannot engage in any substantial gainful activity, such as active employment, because of a physical or mental condition. And a doctor has independently determined that this can be expected to last continuously for at least a year, or it's expected to lead to death. So let's say this did not apply to us. Did you take the distribution within 1 year of the date on which your child was born or the adoption of your child became final? Was this a return of contribution? So if you want to know what that means, you can hit that button. And basically it means that you took back a contribution that you made and you didn't take the deduction for it, or the distribution was made before you filed your tax return, and it also included any income that you might have earned in the account. So let's say no. So what portion of the distribution was rolled over? Well, let's say all of it. So in this case, it wouldn't be subject to an additional tax because it met the requirements of a rollover. So then you would need to go through the interactive tax assistance specifically to talk about reporting the transfer or rollover of your retirement plan. Let's say that this, uh-oh. All right, let's go ahead and start over this one. Sometimes when you don't back out all of the way, you end up having to restart the entire tax tool simply because the questions kind of get stuck in there. So let's go through, get back to the point where we were. We said distribution code 1. We did not receive it as a beneficiary. We were not age 59 and a half. We were not permanently and totally disabled. This was not related to a childbirth. It was not. Let's say that none of this was rolled over. Did you receive the distribution in a series of substantially equal periodic payments using an IRS approved distribution method? This is one of the early withdrawal penalty exceptions under Internal Revenue Code 72T. Let's say we did not do that. Were you a military reservist? Because qualified reservist distributions can be taken without penalty. Was this due to an IRS levy? No, it was not. Did you have medical expenses that exceeded 7.5% of your adjusted gross income? Did you pay higher education expenses? And it does not include anything that was granted educational assistance, tax-free distributions. So let's just say yes. Was the education for any of the following? Yes, it was. And the student attended an eligible education. Was the distribution more than the higher education? In this case, because you made the withdrawal to pay for higher education expenses, that would not be considered an early withdrawal. So if we selected no, and we did not lose our job, and we did not pay for a first-time home purchase, then we don't meet an exception to the additional tax, in which case you would need to calculate your tax as well as your 10% penalty. You would report this on IRS Form 5329 as well as Schedule 2 additional taxes. So we're not going to go through this one again. We're simply going to go back and discuss some of the decision points. So let's start with, it's important to notice that there are going to be different rules for all of these different types of plans. There are certain, for example, certain tax treatments are done a little bit differently for IRA distributions as opposed to qualified retirement plans from your workplace. There's different treatment for deferred compensation, for non-qualified plans, for Roth accounts. So when you're going through all of this, just be sure that you're keeping track of all of the things that you are selecting. So let's go through a relatively quick one. So what I would do is consider printing out this review sheet that basically says all of the questions that you answered. So in here it shows you were talking about the 2022 tax year. You received a Form 1099 with the code 1. Did you receive it as the beneficiary of a deceased account owner? Yes. So in this case, your distribution wouldn't be subject to the additional tax because death is one of the early withdrawal exceptions. But what I would do is I would make sure that I take a close look at the questions and make sure that the answers reflect the actual facts as you see them. And if not, then go back through the tax assistant again and make sure that you get it right. And then once you get it right, then you can print a copy of this and keep it in your records. And the reason you might want to do that is even though this does not qualify as tax advice, you are using it to kind of make a decision. So if you walk through this and the facts are correct, then if there's a mistake that is uncovered down the line, then you maybe ask questions by the IRS. And there is a world of difference between showing records that you've kept and being able to walk through your decision-making process using your records versus not having any records and really not knowing how you came across certain numbers that you might have reported a few years after you filed your tax return. So you can be hit with like accuracy related penalties or negligence. And you know, if you made a mistake and you show that you tried to do the right thing in your records, you'll at least be more likely to receive a benefit of the doubt. You'll still end up owing taxes and interest and probably a penalty for failure to pay that tax. There's not a whole lot of discretion there. However, if you're showing your records and you made an honest mistake and you're able to show that you did the rest of your tax reporting with care and diligence, then the examiner will be less likely to give you a penalty for just wanton disregard of the tax code. So you should always try to keep records of how you made decisions and where you got that authority or where you think the tax code applied in your favor. So that's all we have for this article. We did write articles and produce videos on several of the forms that we discuss in here, like Form 1099-R, Form 5329, and Schedule 2. We'll put links to all of those in the show notes. So if you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's a topic you'd like us to do a video on in the future, please post your comment in the comment section. Thank you very much and have a great day.